Thanks, Chloe. I hope you've had a chance to scan the QR code and answer 2 questions. But let me just verbalize them. The first question is, which climate technology do you expect to be the most impactful by 2030? So the time frame is this decade. Now, if you go to the second question, similar question, but the time frame is different. Which climate technology do you expect to be the most impactful further down the road in 2050? I'll just give it a minute. Okay. Now, I think we're getting the responses in. It looks like for the first question, most of you expect renewable energy to be the most impactful by 2030. Now, this is not surprising, right? So renewable energy today is prevalent. It is at cost parity in many parts of the world. And let's look at the answers for the second question for 2050. Now, most of you expect renewable energy to continue to be prevalent today. I think some of you are thinking about carbon capture, utilization, and storage as well. We're getting very close. Okay, I think we have a winner here. Let's take it as CCUS as the winner, and that it will be catching up on renewable energy, right? So this is debatable, when we look at technologies that we expect to scale by 2050. I think we all recognize around in this room that solutions like renewable energy, electric vehicles are necessary, but they are insufficient to be able to achieve net zero in the long run. And so we need carbon removal solutions like direct air capture and bags to scrub carbon directly from the atmosphere. So the central question for this panel today is, do we expect carbon removals to displace carbon avoidance in the foreseeable future? So we have a great panel today with very diverse backgrounds. So joining Tom on the panel is Mr. Mark Harima. He's a lifelong entrepreneur who straight out from Princeton University 20 years ago, developed a methane capture technology to displace plastics. And completing the panel is Mr. Jonathan Goldberg, who saw the light and moved from commodities trading to found a carbon and fund management business. And so thank you very much for joining me today. So John, my first question is for you. So you founded Carbon Direct in 2019, and it's to bring together scientific expertise and financial capital to remove carbon dioxide. So today, Carbon Direct has more than 50 carbon management scientists advising Fortune 500 companies on navigating the carbon emissions landscape. So I have 2 questions for you, John. My first question is, what motivated you to start such a business? And the second question is, responding to the poll answers, do you agree that in 2030, renewable energy would be the most impactful? And by 2050, we expect CCUS to catch up.
Sure. No, thank you for having me. And as you mentioned, I guess my background's in traditional energy investing. I really got fascinated by the world of carbon management through the intersection of policy and energy investing, specifically looking at the science of carbon management and not being a scientist, but being able to tap into an amazing sort of repertoire of experts who have been looking at essentially all of the above solutions, looking at nature-based solutions, looking about engineered solutions, both for carbon removal and carbon management. And the thing that really struck me was a lot of the market mechanisms to bring these things to the market actually did exist. There already are a lot of policies that interplay with traditional fossil fuel investments. For example, this isn't a new thing for energy investing. When you look at what the market structure needs for whether it's carbon removal, or yesterday we spent a lot of time on sustainable aviation fuel, we had been working with refiners on offtakes for petroleum-based jet fuel for a long period of time. It's not substantively different to do it for sustainable aviation fuel. There's different feedstocks, different considerations. So a lot of that market plumbing existed in other areas, including growth equity investing, but not yet in carbon management. So we thought and we think that if you can take what matters, which is the science and the carbon math behind it, and marry it with policy and investing, you really can make a dent. These are visible things where we have pathways and knowable solutions that I think can scale and are starting to. So that's what motivated us to start. On the poll, I'm frankly surprised. I thought the poll results would have been 100% renewable by 2030 and then frankly the same by 2050. I suppose it depends on how you define impact. It's important to note, electric vehicles don't have much of an impact on net zero if they're not powered by renewable power, for example, right? The reason that we do think carbon removal will play a very big role, both nature-based and also engineered, is the price of, and Tom mentioned this a bit in his presentation, the price of renewable power has gone down so dramatically in the last 10 years. 10 years ago, the full life cycle emissions of doing direct air capture if you're using grid power were pretty bad because you were using natural gas and coal to run a direct air capture facility. Doesn't make much sense on an LCA basis. And were really, really expensive, even more expensive than they are today, because most of the OpEx are driven by power costs. So I really view renewable power as an enabler of essentially all of what we're doing, including very important things like CCS, but I don't view them independently of one another. I think these things really do feed. It's an energy system. It's not one thing or the other.
Thanks, John. Maybe just moving on to Mark or Tom, if you have any quick responses to the poll results.
First, thanks for having me. Good to see you, May. So we do CCU, carbon capture utilization. So I was pleased to see the outcome of the poll. I'm pretty sure my colleague in the back was just clicking vote over and over. So look, no one knows the answer to this, right? I think at the end of the day, one of the really important themes in this space is an all-of-the-above approach. We know that renewable power is critical, and we should drive that as hard and as fast as we can. And we also know that CCU and CCS are going to play important roles. So I'm very, very pleased to see the poll, but I think it's going to be an all-of-the-above approach.
Thanks. And Tom, any quick response to the answers?
Avoidance and sequestration, it's all from the same pool. Like we can go talk about them like they're different, but the macro problem is basically the same. And to the extent that we can get a lot of avoidance in place sooner than later, then the total debt that we're going to need to pay back is going to be quite different.
Okay, thanks.
Actually, up at the 5 trillion plus, there may not be enough room to practically get the mass flux in time. So we should not get up into the 4 or 5 range.
Thank you. Now, I'll just move on to talk about, from the what of technologies to talk about the how. So, this is actually for Mark. So I learned from lunch yesterday that today is the 20th anniversary of New Light. So a big congratulations to you, Mark, and to New Light. And what I find fascinating about New Light is that you capture methane to produce bioplastics. Now, this is very powerful considering that, methane is 28 times, more potent than carbon dioxide. Now, I have 2 questions for you, Mark. So the first question is, how did you start New Light, and what attracted you to solve the methane challenge? The second question is, how did you overcome the investment challenges that startups face, and how are you looking to scale your business today?
Sure. Yeah, exactly 20 years ago today. It was June 7th, 2003, and I read a newspaper article in the LA Times called "Getting the Cows to Cool It," and it was talking about cows and the methane that they produce. And there were 2 really interesting features in this article that caught my attention. The first feature was that cows apparently burp most of their methane. Didn't know that. The second feature was that each dairy cow was burping about 600 liters of methane per day. Well, we all learn about methane from cows, but this was the first time that I had seen the specific number. And what was important about having a specific number is you could do math with that, right? So as my mom will retell the story, I just started pacing around the house asking questions and trying to calculate, well, what was the value in that methane? And it turns out if you do that math, it was about $19.33 of methane value burped per cow per year. So if you have a 1,000 cow farm, that's about $20,000 in value into the air. And so the little kind of, I guess you could call it a light bulb that went off was, everyone was talking about taxing carbon or burying carbon, and there's certainly merit to those things. But what if we could take a totally different approach? What if we could take this carbon that would otherwise go into the air and use it as a resource, a valuable resource to make products? And what if you could sell those products and have a net profit margin? So all of a sudden, you could potentially have a market or consumer-driven pathway to carbon reductions. And so this started a journey, and we started looking for, well, how can we take carbon that would otherwise go in the air and turn it into useful products? And one of the things that we discovered was that there are microorganisms in nature that all they do all day, every day is eat greenhouse gas as their food source and use it to grow. In fact, if you look at the BP oil spill back in 2010, one of the things that you can look up is National Geographic did an article, and the question was, where did all the methane go? So there's all this methane pluming from the ocean floor. Where did it go? It seemed to be lost. And they discovered that there were these little microorganisms in the ocean water that were eating methane, so they're called methanotrophs. And as that methane was bubbling up through the ocean, they were consuming it and using it to grow. If you look at that article, they do these cryo slices of the microorganisms, and you have these little globules in there. Well, a couple of those are a very special material that these things make, and that's a molecule called PHB. Now, probably no one here knows about PHB, maybe a couple people, but we don't grow up learning about PHB. But we are all making PHB right now. In fact, pretty much everything alive makes PHB. And so do these microorganisms that consume greenhouse gas. Turns out, if you purify PHB and isolate it, it becomes meltable. Now, as a meltable material, you can use it to form shapes and parts and pieces. In other words, what you have is a replacement for plastic. And so we went on a journey to look for these microorganisms that could carry out this process. It took us many years we searched oceans and estuaries and backyard, front yard, landfills, wherever we thought we could find these guys. Eventually did, and figured out how to purify the material, turn it into parts and pieces that could replace plastics, and eventually scaled up the business. So today, if you're in New York City and you go into a Shake Shack, the straw that you're going to be drinking out of is made from this material, a material that was grown by microorganisms from greenhouse gas. So this is what it looks like. This is carbon, greenhouse gas, that would otherwise be in the air. Not a short journey, as you say, it was about 20 years. And to your question along the way, in terms of capital raising, incremental. We started in a laboratory, then pilot scale, then slightly bigger pilot scale. It took us about 10 years to go from a lab to our first contract manufacturing plant, and then another number of years to keep getting bigger and bigger scale. Today, we now have our first full commercial scale production plant, delivering to over 5,000 locations across the US. But it's been a journey, and one that we're really excited to continue.
Yeah, when we talk about scaling, I think central to it is the cost, right? So I think we have an interesting question. The first question that came up from the audience is, how can we bring down the cost of carbon capture drastically? So when we look at carbon capture today, we are looking at, for example, direct air capture. We are talking about $600 to $1,000 per ton. And the expectations that this would drop with technology development to possibly below 100. Now, so how do we get there? There is no universal value of carbon today. So the question is, what does it take to be able to bring down the cost so that we can scale up carbon capture? And perhaps a question for you, Tom.
Yeah, controversial answer is that it may not be the best to do it the way that we're doing broadly. Like, we actually have, gotten rid of very ecologically damaging things in the past. So, for example, DDT or CFCs through the Montreal Accord. And the way that we got that done was a simpler principle called polluter pays, which says, like, if you keep using it in the next 5 years, you pay this much. If you keep using it from years 5 to 10, you pay a lot more. If you use it beyond year 10, it's crazily expensive. And if you are a carbon dioxide, polluter, then effectively a polluter pay principle would actually get rid of things way, way faster. Now, if you have to do it through a market mechanism, then it's an artificially priced market mechanism, in which case we just need to go figure out the cheapest way to do it. The cheapest way to do it is nature-based. The problem with nature is that The problem with nature is that it's not as easily financially enclosed. So our ability, so we have to actually spend way more money than MRVs than beavers spend solving the problem. Or we have to spend way more money on, like planting and all that sort of thing than, a whale or something else could actually just solve the problem. Now, I don't know what to say, like if we have to enclose everything in order to for it to count. But nature does physically work. This is the reason that all the carbon is where it is in the first place. So we either need to get to better models or be able to just move forward in good faith that nature will do a lot of this stuff and then measure it post facto as opposed to pre-pricing it and being super cautious. And look, maybe you set it up as a mechanism where you set a low bar for how much it's likely to sequester, and if nature surpasses it, then you get paid out a lot more. That would probably be fine, right? Then nobody's scared that I got into credits that weren't worth enough. But to the extent that human beings need to do that activity, it's always massively more expensive. Now, you're talking about 600 to 1,200 per ton. Nature-based stuff can do it in 10 cents, 50 cents, $3, right? $5 would be kind of expensive actually per ton. And at the end of the day, it's that's several orders of magnitude different. Now, if you are going to do technical, you should aim for concentrated flue gases. It's a better spot in terms of entering the entropy curve at the right point. So that's the answer. Thanks.
Yeah, thanks, Tom. I think when we look at, besides the costs, we're looking at scaling up, there's also questions about the social impact of solutions like direct air capture. I think we do need to look at various solutions, nature, tech, and they all complement to bring down GHG emissions. So the question here that we have is, how do we manage the challenges and trade-offs with regard to land use when deploying solutions like BECCS? How do we look into how that might compete with food and land resources?
Yeah, I mean, BECCS doesn't totally pencil out that great in most situations. When you think about using land in order to go generate biofuels, for example, dry biomass has got 1/5 the energy density of gasoline. And if you look at the practical tonnage of what agriculture produces compared to the practical, it's a slide that wasn't in my deck, but it's in one of my other talks, relative to the practical tonnage of fossil fuels that would need to be displaced. You would need to, in order to displace all fossil fuels, you would need to increase the amount that we're growing in agriculture by more than 6x. And there's just not enough land on the planet to go do that. So that's not how you displace the whole thing. Maybe a couple hard to abate sectors, like aviation fuels or something, will do a carve out or something and it'll be subsidized and you'll be able to kind of use that kind of approach for it. But yeah, what works way better than, like BECCS for biofuel or BECCS to do biochar and then put it back into the land is actually just drive healthy ecosystems. They actually store more carbon and more permanently. Yeah,
thanks, Tom. I think John also would be interested to hear about your perspectives, given that you have a team of scientists specializing in various areas of carbon management. So you have scientists looking into agricultural solutions, nature solutions. You also have scientists who are very deep tech, expertise as well. And so related to this question is, how should an investor be thinking about tech maturity, cost, and social impact? So there are several dimensions that we need to consider for investments. How do you think an investor should be balancing these different elements?
Yeah, it's a good question, and I don't know that there's one answer, right? So different investors are looking at different parts of the spectrum of the capital stack you've got. And I thought the presentation that you guys did on impact was quite good. If you do an early stage galvanizing investment, you're going to be low in sort of total dollar terms, but arguably that company wouldn't have existed without your money, and therefore the impact is quite large. We do this in some part by narrowing where we focus, right? We're only investing in things that their revenue stream is derived by the tons of CO2 that they're either removing or converting. It's a very tangible numerical way of showing impact. We know how many tons our companies have removed at the end of the year. We know how many tons of CO2 they've converted into a useful product. And then you could do some measurements on sort of the large-scale impact, looking at the size of the market and things like that. And we do all of those with a minimum return threshold, right? So with our stage of investing, there's a certain capital return that we demand on our money. So it becomes very prescriptive from how we operate, as opposed to sort of looking backwards in how we're investing. So I don't think that there's one answer to it, but I would argue that all of it should be grounded in some type of, if what you care about is the tons of carbon with other co-benefits and other things, it does need to be grounded in some type of arithmetic at the beginning stage of that investment.
And this question is quite full on, removal, avoidance, or both. And if both, what's the right percentage split?
Yeah, so I mean, they're somewhat reciprocals of one another, right? So the more carbon reduction we do more quickly, the less carbon removal we're going to need. The exception being we've already put 1.6 trillion tons or so of CO2 into the atmosphere, which is going to have to be dealt with independent of what we do with reductions. IPCC estimates are order of magnitudes 10 gigatons per year of CO2 removal, called 100 gigatons cumulatively, assuming that we're sloping down on reductions. It'll probably be a little bit more. I mean, the thing is, it's not binary, right? So if you do less than 100 gigatons of carbon removal, the world doesn't end. You get higher temperatures, you get things that are worse than they would have been otherwise. So I really think it's a combination of those things. One thing that we try to advise clients on and do ourselves is look very closely at, some people call it a marginal abatement curve. We prefer to look at it as like a levelized cost of carbon abatement. So per dollar, how many tons of CO2 are you either removing or avoiding? Some of those things are, as one of the panelists mentioned, in the money today. So things like offshore wind, depending on where you are, is quite a bit cheaper. The IRA has actually shifted the investment curve quite a lot in the US, where right now it is in the money, inclusive of tax subsidies, to do things like point source carbon capture on ethanol, point source capture on fertilizer, because the cost of capture is actually quite low relative to the $85 a ton carbon tax. So it's really all of the above, and the amount of removals we do is simply how much we're willing to pay and how quickly we do on reduction.
Right. So talking about carbon tax, IRA, I think we'll just shift gears to the topic of regulation and policies and the role that they play in climate investments. And so Mark, this question is for you. How has policies enabled or actually impeded new lights development? I mean, you've been running this business for 20 years and seen through shifting developments and policies. So the question is, have they been helpful? What can be done more to spur innovation into climate technologies?
There's two big things that we focus on. One is helping to solve for the issues around plastics, and the other one is around carbon. And I bring that up because right now we think of ocean plastic pollution as something that we all agree on, we all know about. But it wasn't that long ago that was not a major topic. Call it 2015, it was just starting to emerge. Well, somewhat similarly in terms of carbon, now we use these terminologies as if we've been talking about them forever, from removal to avoidance, all these things, but they're actually fairly new, at least in terms of popular parlance. And I say all that just because when we got started, government policy looked like it was nowhere close in terms of being something that we could rely on. And so one of the founding pillars of our company was, in fact, that we just assumed that there would be no policy that would ever be there to support us. And then we kind of were proud of that in the sense of we set out to create a technology that did not require, for instance, carbon pricing or anything like that to be successful in its own right. And I actually stand by that today. I think that to the extent that carbon pricing is there, of course, we'll take it. And some of the numbers that we're seeing are actually, they're very nice. But at the end of the day, we don't know where that's going to go, right? Because it's a political decision, those things could change. And I think the best thing that a company can do is try to figure out how it can, utilize those sort of policy type things to help spur the business, but not have to have them, because that creates a lot of uncertainty. I think going forward, there are things that certainly could have a massive impact. Carbon pricing, if one were taxed for carbon, I mean, you'd see an absolute game change overnight. But the practical reality is that's probably not going to happen, at least in a lot of, for instance, it's not going to happen in the US. But there are certain things, like 45Q was quietly one of the biggest movements in the carbon space. There were maybe a handful of carbon capture projects pre-45Q. Post-45Q, the applications were in the hundreds because all of a sudden the economics changed. And so clearly the government can play a meaningful role. But I think we as a company have we look at it practically and say, we can't count on those things. Some of the things I think the government could do, though, that could be achievable and impactful are this theme of transparency is a good one. For instance, if you knew that t-shirt took 1,000 liters of water to make, and that t-shirt took 5 liters of water to make, and they both look the same, marginally, you're probably going to choose the lower water one. Same thing with carbon. I think as I was staring at the GenZero logos, I realized that Gen Z is in the logo. And Gen Z is a very, very important demographic because they do actually care. So imagine if products had like a calorie count, right? And this is talked about every now and then, but imagine if it was mandated and you saw the carbon footprint of these products. Well, now that enables, you're not telling any customer what to do, but it enables them to do something. So I think those are the kinds of policies that are interesting because they're not quite so controversial that they're almost impossible, but they do enable things. So we want to be part of that conversation and encouraging things like that.
Yeah, it's interesting how early on you have tapped onto the carbon markets to be able to transition or rather bridge the cost for the products. I think, John, the question for you is, you've been working with many companies, Fortune 500 companies, and advising them on how to think about offsetting their carbon footprint. And perhaps it would be interesting to hear from your perspectives, given your broad interactions with many companies at the forefront of carbon removals as well. How do you think carbon credits can continue to play a role and in accelerating the demand for negative emission technologies?
Yes, so the work that we do with companies does spans carbon reductions as well as carbon removals. Companies are certainly looking to, if they can, first reduce at least to a substantial amount the carbon that they're emitting. The challenge is that's very hard for most, if not all, companies. Their businesses are growing. There aren't great solutions for many parts of their underlying business lines. And I think the companies that are doing it well look at carbon removal as an additional and necessary part of the decarbonization in the same way the IPCC would, right? So focusing on carbon reductions and then recognizing there's an important and very big role for carbon removal as well. It's still very early. These markets are really small. $2 billion a year, give or take, on the voluntary carbon market is not a lot, particularly relative to the size of the overall energy infrastructure, which is many trillions of dollars per year. And I think it's evolving, right? So right now there's a pretty active debate if offsets or carbon credits should be part of the story at all. We think that it should be. Some others disagree. There's a lot of active dialogue on that right now. I think what companies are really focused on is, be it in nature-based or in engineered solutions, to make sure that the quality of the credits that they're buying are good and maybe better than some of the credits that have historically been in the market. And by that I mean they're looking at things like, are the credits additional? What's the duration of the storage? Are there positive co-benefits or negative implications of the credits that they're buying on ecosystems or other types of things? There's a few questions here about MRV. How do we know that what we're paying for is additional, and also that the carbon stays either in the ground or in a biological bank, essentially, for a long duration? If it's a temporary solution, and nature-based solutions are temporary solutions, how long will they last, and what's the value of that? Because I'm comparing it against a permanent emissions that's coming from flying in a plane or something of that nature. So these are just some of the questions people are focused on. The final one is, of course, cost, right? Engineered solutions right now are quite high. Only via offtake will the price go down. But it's certainly hard for folks to spend a lot of money on something that doesn't actually generate a product for them. It generates goodwill, it generates consistency with net zero products, but you're not procuring something for your actual business.
Yeah, I mean, the question here is, how do we know that with confidence, how much carbon is sequestered with negative emission solutions? Yeah. And, how do we know that it will stay in the soil, in the ocean, and it will, it will not re-enter the atmosphere over time? I mean, how do we know with confidence?
So it varies by vertical, and it varies quite a lot. MRV is a big part of what we do, monitoring, reporting, and verification. With direct air capture, one of the things that people are positive on is it's quite easy to measure. Carbon goes into the ground. We've got a lot of experience taking CO2 essentially from rocks. You can put it back in. You can meter it. You can monitor it. We've stored globally about 500 million tons of CO2. Incidence of leakage is 0. It's fairly straightforward to do. Biological solutions are much, much harder. Right now, there's been a few mentions. There's massive forest fires in Canada that's impacting air quality everywhere. If those and many forests in Canada are enrolled in some type of forestry carbon credits, well, if you're in those, well, literally your credit is up in fire right now. You've lost that value. So these are temporary storage. It varies between forests, soils. Soils are very difficult to monitor carbon on a long-term basis. People are trying to do it through modeling. Some of those modeling impacts are better than others. We actually think you still need to do a lot of field testing on soil to get the carbon measurement right. So it really does depend by vertical, and it is a big part of the cost of nature-based solutions is actually getting that right.
Tom, you invest into MRV solutions as well. Anything you want to add to John's remarks?
We have one investment in MRV solutions just to see what it's like. It's a pretty miserable business. And that's not to say that we won't look at other stuff in the future, but it's a bit miserable right now. Like multiple panelists have said, it's way more expensive than the actual solving. And because of that, we have another investment, which is about massively reducing the cost to measure. So yeah, I mean, we can invest in technologies related to massively reducing the cost to measure. Going to the previous, the basis of the question of how do you become confident depends on the nature of how a thing is stored. Like things that are stored in anoxic layers that are not being disturbed, actually relatively permanent. Like our current oil and gas, deposits are all around the world. Used to be wetlands, because that's how permanent it is, right? Like literally, 100 million years plus. And then there are reactive sediments at the ocean floor, also like millions of years plus. And then there's labile carbon, which might only be stored for a day and re-emitted when a small organism dies. And there's many grades of labile carbon, from 1-day storage to 1-week storage, for multiple year storage to multi-century storage to 10,000 year storage to millions of year storage. Now, I don't think we're even having a sophisticated conversation about it right now. Right now, we just say nature-based, unreliable. Enhanced oil recovery, pump it into the ground, 400 bar, reliable. But I don't know. Like, I think that's a failure for us because we are basically going to the solution that is most easily financially enclosed. And is the right evaluative vector, the interface with the economy? Is the right evaluative vector the interface with voters? Or is the right evaluative vector solving the problem? And I'm a boring person. Like, my evaluative vector is always the third thing. And I try to go work out how to use the other two vectors to approximate the third thing. But that's kind of the trouble of this particular moment in history.
Yeah, I mean, you're right. It's a complex problem that we're all trying to solve here, which leads me to, I think, the last question that we'll take. And this is an interesting one. It says, only scientists, engineers, and PhDs are qualified enough to figure out negative emissions technologies. Is that right? No? I don't have a PhD, but perhaps someone with a PhD can. I mean,
beavers are engineers. Is that what you mean?
I hope not, since I have neither of those things and run a firm that both invests in and advises on it. So no, I don't. One of the things that attracted me to working on both negative emissions, but also broadly carbon management is, yes, some of the things like measuring carbon fluxes in the oceans is very, very complicated and requires some relatively sophisticated science. Understanding how to do, for example, an offtake of sustainable aviation fuel, going through the life cycle intensity of that. I mean, this sounds very boring. This is Microsoft Excel work, right? It's not engineering, it's financial plumbing, it's contracting, it's things of that nature, which are skill sets that folks like investment firms, I think, can bring to bear to negative emissions and carbon management. And no, I think quite a wide audience can play a part.
Definitely. Mark?
I think it's really important that the answer to that is no, because the whole world needs to be involved in this in some form or fashion. I go back to that sort of calorie count concept. There needs to be deep and very sophisticated science and calculations and methodologies behind all this stuff, but it still needs to be accessible in a way where this isn't just always someone else doing it. But that's going to be part of the world getting better at this whole subject, right? It's still really new in just overall societal terms. So I think companies like Carbon Direct and others are going to be developing more and more tools that continue to make that answer more and more accessible.
Thank you so much. So I think it's a consensus. We need nature, we need tech, we need people, PhD or not. We need innovation. And thank you so much for coming today and joining us at GenZero.
Thank you.